Alright guys, Vesper Finance Vsp, Vesper Finance Blockchain. Now this token guys, Vesper Crypto, has fewer tokens than Bitcoin and it has more utility than Bitcoin. So this can be pretty much seen as the second coming of Bitcoin and is a no-brainer investment. And this is what we're going to talk about today. Do you guys ever get that feeling where right now you're looking at Bitcoin and the price is around $40,000? And someone told you to buy Bitcoin when it was around $5, $10, $300. That's fine, I'll still buy Bitcoin if it was $300. But you never took that step. You never took that chance. And now you're just struggling to get one Bitcoin. That is the exact same thing with Vesper Finance. Because the max supply of Vesper Finance is 10 million coins, 10 million tokens, 10 million cryptos. There's not going to be any more than that. And 10 million, the last time I checked, is fewer than 21 million Bitcoins. So if that got you interested, then I encourage you to watch this entire video because this is a potential coin that can go to, I don't know, 10,000, 20,000, 30,000, maybe 40,000 because it has less supply than Bitcoin and more utility than Bitcoin. So if you're interested in that, then please smash the like button, smash the subscribe button, and now let's jump into Vesper. Alright guys, so if you missed buying Bitcoin at $10, here's your second chance. This is the second coming. Not all of us get second chances. That name is Vesper. It's $7.78 right now. There's a total supply of 10 million coins. Max supply of 10 million coins. That is less than half of the max and total supply for Bitcoin at 21 million. And this coin has already hit or made an all-time high of 75.62. No, that is not right. It is 79.51. And right now it's sitting at $7.78. So it's pretty much a no-brainer. Alright guys, so this video is as much as it is for you as is it for me. Because there is less than half the amount of Vesper than Bitcoin in existence in the world. And Vesper is an ERC20 token, so that means it runs on the Ethereum blockchain. With the gas fees, it's not that great, but once they get that fixed, that's going to be fine. So if you haven't watched my video of how much ETH or Ethereum you should have in your portfolio, then watch that video here because that is crucial. Let's first do an overview. Vesper is very much like Refinance. It is a platform for easy to use DeFi products, and if you want more information on Reef, then I did a video over there. But this project is held up by three pillars. Vesper products, which is basically interest yielding grow pools that lets users passively increase their crypto holdings based on their risk tolerance. The second thing is Vesper token. Like other tokens, it incentivizes participation, facilitates governance, and catalyzes user contribution. It can be earned through pool participation or contributing to the Vesper community. And the last one, number 3, is the Vesper community. What you do is you're basically building on top of Vesper, building your app on top of Vesper platform, and you earn a portion of the fees that you generate with your app, for example. Now, here are the prime features. It is non-custodial, which means that it is all maintained by smart contracts, which means that you are in control of your funds. You're not giving it to the bank. In that case, you're giving the bank money. You're actually broke. The bank has control of your money. But Vesper is also permissionless. It's trustless. It's censorship resistant. Basically, the investing and management of your funds are all based on an algorithm. There is no human greed involved, which is most of the time what we want. Let's talk about Vesper Grow Pools because that is a term that is new to us. So the idea is to combine deposits into a unified strategy that gives interest and to buy back more of the pool's deposit assets and turn that into passive returns for pool participants. So pools are really differentiated by deposit assets, strategy type, and risk level. And the first pools are conservative pools like Ethereum, wrapped Bitcoin, and USDC. Vesper Grow Pools, what they really do is they deposit your assets that you give to them into third-party DeFi projects or protocols that generate interest with the goal of growing those deposited assets. So it's basically mutual funds if you look at it from another point. The funds in the Vesper pool are also used to lend, to borrow, and to yield farm across different DeFi projects. The user, which means you and I, will select the project with the asset that we want based on the risk tolerance that we have. And Grow Pools really have three main modules. The first is collateral. Basically, this is moving your deposits to where they can earn yield, like on Aave, on Maker, or Compound, and handling the deposits and withdrawals. The second module is strategy, and this part is where we deploy capital to generate interest. The third module is action. This module determines how to claim interest and whether to distribute or reinvest the proceeds. So what happens is you're using MetaMask to deposit into a Vesper Grow Pool, and in return you get something called a V token, which is kind of like an IOU or a bond. You can later trade that V token in to collect back your principal or your token and the interest earned. And while you're waiting, you can even deposit that V token somewhere else to earn interest. So it's kind of like a double interest strategy. The fees you pay are 0.6% for withdrawals and a 15% platform fee for accumulated yields. 5% of the 0.6% and the 15% goes to the developer as the developer fee of the strategy. So that could be you if you developed a strategy that makes money for people. And on the off side, Vesper is really banking from the fees that they're collecting. So let's talk about rebalancing and collateral management right now, because that's an important part of the operation that Vesper is running. What you deposit is actually posted as collateral, and this allows the pool to take out loans. Withdrawals, on the other hand, will remove collateral. So how I see it, I kind of see it as the algorithm doing a more safe leverage investing for you. What they do is take your deposited asset, like to wrap the Bitcoin. They use it as collateral to borrow more and invest what they borrow in order to get you bigger returns. And if withdrawals or risks become too much, then it rebalances. I know, guys, sounds too good to be true. That's why we're going to talk about risks next. The main risks for Vesper pools are black swan events. That's basically it. An example of that would be like the underlying asset seeing a rapid flash crash. But that kind of thing doesn't just affect Vesper. It'll also affect the entire DeFi industry on the whole. Black swan events, if you don't know what they are, they're basically things that people cannot predict, like 9/11, COVID. Those are black swan events. The worst case scenario is a partial liquidation by the lending protocol. Like Maker, if they use that, then they carry a 13% fee for capital liquidation. But this risk can be mitigated by picking a conservative pool or a stablecoin offering that has no volatility risk, unless something bad happens. Like if the US dollar loses its reserve currency status, then that is all over. But the mitigation strategy for that is Bitcoin, because Bitcoin acts as a hedge against the US dollar. Now let's talk about VSP Economics. Now users can earn VSP tokens by participating in Vesper pools, providing liquidity, or by staking their VSP tokens. Grow pools will drip out VSP tokens as an extra reward on top of the passive yield the pool generates. Staking is self-explanatory. It's like earning interest from the bank back when the days the bank gives you interest for depositing your money with the bank. Now they give you jack. Providing liquidity, being a liquidity pool provider can also give you VSP tokens by, say, providing the VSP ETH pair on something like Uniswap, then you probably earn VSP tokens there too. If you want to learn more about staking, providing liquidity, then you can just go search YouTube. I mean, we're not going to get into that here because it's too big of a topic. On an off note, if you're interested in passive income streams and you're interested in passive income streams that I do, then you can check out my page that I have here where I list out all the passive income streams that I have. Some requires no money and have no risk, but the rewards are pretty small. Some requires investment and it has a degree of risk, but the ROI is much bigger. So check that page out. You also get a free book if you go over there that I wrote that you could learn to leverage the bank in order to make money yourself. So go over there, check that out, get that free book. People love free stuff, so why not, right? Alright, so over here we're on the Vesper docs. Let's take a look at the supply dynamics. The total supply is 10 million VSP. And 6.5 million or 65% goes to the community. 3.5 million VSP or 35% goes to the Vesper team and advisors and strategic partners, which is subject to vesting over 12 months. Now here's something interesting. The community may vote on whether to burn the admin keys and fix the supply at 10 million forever or assign minting ability to the DAO for future management. Basically, if the community wants more coins and if there's a bunch of whales holding coins, then they're likely not going to want more coins because it dilutes what they hold, like the US dollar. Then they can do so by giving the DAO the ability to mint more coins. But I really do think that this is just going to stay at 10 million. So we're just going to quickly go through the revenue model and call it a day. So let's take a look at how the fees work. Like I said before, there's a 0.6% fee on withdrawal and a 15% platform fee on yield. For community pools, a 5% share of both of these fees go to the developer who authored the strategy. This is paid in the pool's asset. So for example, let's say a community pool has $50 million in total withdrawals and $5 million in accumulated yield. This pool would pay 0.6% withdrawal fees, which equates to 300K, and a 15% platform fee, 750K, for a total of $1,050,000. Of this $1,050,000, the developer will get a 5%, $52,500, and the remaining $997,500 would go to the treasury, and that is converted to VSP via open market buyback. So they're going to the market and buying back VSP with that money, and 100% of that VSP is then distributed to VSP pool participants. So it goes back to you if you're a pool participant. So more of the story is stack up on VSPs. And also the developer thing of strategies is pretty cool, because I don't think you even need technical abilities or skills to operate or make a strategy that you can profit off of. If you're wise and you're nifty with building these strategies, then you could earn a pretty good living from that, I think. But anyways, that's all I got for today's video on Vesper. Really cool project. I am totally getting into it. Other than that, if you've enjoyed this video and you want more, then please smash the like button, smash the subscribe button, check out these other videos on cryptocurrency and passive income, and I'll see you next time. Peace!